Volatility is at an all-time low, so is this the calm before the storm? Joining me today from the floor of the CME, Phil Streible, Senior Market Strategist over at RJO Futures. Phil, good to have you back on the show.
Yeah, thanks for having me.
So, Phil, I need to ask you, there's talk of economic data weakening, but investors are still rushing into stocks as the Fed remains dovish. So is this cause for concern here?
Well, yeah, if you look at the data that's coming out, the economic data, the data that has been dependent upon lower interest rates has all done quite well, like housing starts, housing permits, things like that. If you look at economic data that revolves around trade, like we've got durable goods coming out next week, that could be a miss. So it all depends on how the data, what it's based off of. I do think that it does have a little bit of concern out there, but the Federal Reserve, they don't seem concerned at all.
And amidst this context, gold has taken a back seat with, prices taking a breather here. But that hasn't stopped central banks from buying gold. We saw Russia add to the reserves in October, Serbia joining the mix of countries buying gold. So what do you think they know that investors are missing? Is there a crisis that they feel is coming?
So two things with that. One, these central banks, they've been increasing their deficits. Also, there have been some run on banks and things like that. So they are shifting, and also the declining interest rates, it's kind of a race to the bottom. So those guys are shifting some of their assets out. There's a lot of trade wars going on, and not only between the US and China, there's other ones out there. So I think that it's a smart move with lower interest rates for them to go into these non-yielding bearing assets like gold. And then if the second thing you talked about was a potential crisis. One of the guys who I really follow, like Ray Dalio with Bridgewater, they came out and they got notification. They bought about $1 billion worth of put options in the S&P 500. So that tells you that, these guys are preparing for some kind of crisis around the corner. I don't see it yet at the moment, but it is something that could develop. Interesting.
Phil, also the dollar and gold both moving down together in the last month. As we know, they usually don't move in the same direction. Did this surprise you?
The problem with that was that we saw interest rates being cut, so that weakens the dollar index. Less people are not going to hold their money in banks; they're going to take it out. And with the interest rate cycle, the Fed coming out and saying that they don't see any more, it's not likely that we'll have further rate cuts. That's when gold starts to weaken with it, and that's how they move together. There was a bit of a shift in the British pound here with some Brexit news, but otherwise, it's not uncommon to see the two moving in tandem because it's how people perceive safety. If you're down in a country that has a weak currency, you might sell that currency, buy dollars. That's what pushes it up. And then also, if you're in other countries where interest rates are declining, you might go into gold, and that's how they're going to move in tandem together.
All right. Finally, Phil, I plan to bring you back for our special Outlook series that we always do in December. But short term, can you give us some insights as some key influences you're looking for next month when we're talking price action here in gold?
Yeah, if you look at gold, so, it's really unfortunate because seasonally, 12 out of the last 15 years, if you sell gold next week, you cover it just before Christmas, it has declined. The average decline's been about $37. Last year it was up, but 2 previous years, it was down pretty bad here. So if you look at, a couple other things, the chart pattern on gold, we've seen this decline, it's come up a bit, and now it looks like it's going to break again. That's a bear flag in the chart. And then the target on the downside of the bear flag would be around 1425. That's where you have that 1300 where we broke out to the upside. We peaked at 1550. That'd be a 50% Fibonacci retracement. So unfortunately, I got to say it, I'm not too optimistic on gold here for the short term.
Interesting. All right, well, I will pick your brain and next time you're on some more on that. I appreciate your insights today, Phil Streible. We will have much more for you on Kitco.com.